Investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Hi, everyone. No growl. This is Basil Chapman sitting in for Tom O'Brien, and it's my pleasure to be here for this hour as a guest host. We're looking at I'm the host of the 10 o'clock to 11 o'clock Eastern Time show, the Tiger Technicians Hour. My service here is the opening call daily newsletter, and I will be giving a webinar on Wednesday, the 13th, 4 o'clock to 5:30 for subscribers to my opening call. I should just mention that we've raised a lot of cash. We have long positions, mostly in the commodity area. So things are going quite well there. And let's just go to the market. So the Dow's down 245 at 34,475, sitting right on the 200-period moving average, making an arch formation. In the Chapman methodology, we're always looking for 4 higher peaks. Let me see if I can find this right now. I should have done that right away. Try to identify the lowest low bar and see if you can have a turnaround there that takes you to a peak A, and then successively higher peaks are alphabetized sequentially on the way up, all the way from A to G, but it's at that 4th highest peak, peak D, that other things can happen. Wow, can other things happen? Look at this. We got a peak D in the Dow at 35,372 end of March, and we pulled back, but we've held the 200-period moving average. We've got a peak D, the 4th highest peak. That's where other things can happen. And in the at 4637.30 in the S&P daily chart, pulling back, leg C right now. Above the 200-period moving average of 44.10, it's at 44.35. The technicals are starting to weaken, but I'm going to give it the benefit of the doubt and say until it closes under 44.10, it's in a sell signal right now. That's why it's got the down arrow, not yet a sell mode, which would imply that it should go down. On the way down, we count the peaks, but they aren't as important as on the way up. On the way up, it's always the D that's important. QQQ, the NDX 100 trading vehicle, that is the Invesco QQQ Trust Series, made a peak B at 371.83 and has really tumbled. It's now 342.95. This is way under all the moving averages. This actually is in a sell mode on the daily. The weekly is in a sell mode. The monthly chart, I have to wait for all of the month to wait to see if it goes into a sell signal. We're looking at the IWM, the Russell 2000, peak D, right at the 200-period exponential moving. These are all techniques that I'll be discussing in great detail in my webinar to come. And this is for subscribers to my opening call. You can become a subscriber. You just go to the front page of TFNN, and it's actually 30 days money-back guarantee. You'll be able to utilize this webinar plus all my other webinars, 8, 9, 10 of them, all discussing these different aspects of the Chapman wave methodology. So peak D, pull back from the 200-period moving average in a sell mode in the IWM. But basically what we're looking at, and there's a whole discussion that I have webinars on this as well, but I'll be doing this about the rectangle formation where you can go from a lowercase h, like this, a lowercase h, where the prices come sharply down, and then it tries to rally, and it arches over And if it takes out the left side low, it's really negative. But if it holds and it makes another arch, you can go from an H to a lowercase m pattern. Then you've got to be careful not to take out the left side low. So this is the second. Here's the second arch for the M pattern. And here's an even larger one, all stuck within the rectangle formation. And the implication here is that 187 level is going to be critical in April. If there's a close on any 2-day basis, I'd say a weekly basis, but let's just call it any 2 days, in the 185s, that says that the small caps are under tremendous pressure. Let's go on to gold. There we go. I'll just move this to the side. There's a peak D in the IWM, the rectangle formation. Really important. 244.46 was that peak D high back in, I think it was November, and it comes tumbling down, and it went below 190, then it popped up to 211, and now it's trading at 197. So this is going to be very, very important. Looking at gold. Gold had a much stronger move earlier. It's still up 10. That's good. 1955. So what happened is it screamed up to that high at 2083 on the 8th of March. Comes down very sharply. It's the uppercase A pattern that I'll be talking about in the webinar. Looks like the Eiffel Tower goes straight up and straight down. And then it comes back and it makes the H pattern. It looks like it's going to make an M pattern. But basically what we're looking at here, you see this MACD, the moving average convergence divergence. If that crosses positive, what we'd be looking at is there's now a new impetus for a breakout to the upside. If this green line deflects lower from the red line, that's not a very positive thing. That means that the energy is being usurped, and you've used up more of that energy. Now you have to come back again to try to form some kind of support. So it's real simple for me. If gold at any particular time for a couple of days starts to trade at about 1983, I'd say 1985 or higher, that's really a breakout from this big rectangle formation, and it's going to be very positive. And if you look at silver, silver has a slightly different pattern. A nice move up today, although it hasn't held it. It's still up 32 cents at 25.15. Basically, it's testing the 200-period moving average over and over again, and it's using it as a springboard. So if silver, it'll really help the weekly chart. If silver at any point I'll give it the whole of April, another 2.5 weeks. I'd say if silver at any point on a weekly basis is able to close above this high that was made right there on the 24th of March of 26.16, if it can close in the 26.20s, that's going to be a breakout to the upside. That really improves the weekly chart and really starts to help the monthly chart. No break under 23.90 would be a good sign. Any close under that says, it's starting to fail. And I should mention as well that gold has key support. I'd say at call it 1900, but certainly under 1890 says, trouble here. But it's having a really a consolidation after spectacular up move. Let's go to high-grade copper. High-grade copper pulled back very sharply today. It's at 4.63, where at a peak D in the daily chart after the big massive move to 5.0395 on the 7th of March. Tumbles down to under 4.50, then goes peak A, peak B, peak C, peak D. And lo and behold, what do we have? We have a pullback from this peak D in the arch formation within the rectangle, and the weekly made a double top at a peak D. We're going to be watching this closely. Crude oil, a huge move down today. It's come back a little bit, but it's still down at 94.31. Same thing, we're talking about these rectangle formations that form an arch. What's the implication? And let's just go to the bonds at this particular point. Bonds, they've gone even lower today. 1.632 down at 141 and 31.37.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Talking about peak Ds. Look, we're just in CYTO, which is Altamira Therapeutics Limited. Mentioned earlier on, and then it started screaming from the 1.40 area all the way to the 218 or so level. And then what does it do? It pulls back very sharply. So I did a quick 5-minute chart, and there it is, a peak D in the 5-minute chart. I think that we've got our guest host coming up right now. We've got Steve Rhodes. Hi, Steve. How are you?
Doing well, Basil. Yourself?
I'm very good. Thank you.
Nice to be with you. So I know you're a big tennis player. Go ahead.
Yeah. I was just going to say, just before we get going, tell us the service that you provide here at TFNN, and then we can get going.
Sure. So I provide a daily newsletter service. It's called Mastering Probability. And I send out a morning update, usually by 9 o'clock, if not a little bit sooner. It covers all the markets. When I say all the markets, all the futures markets, all the currency when I say future, I know you mentioned that you're long commodities. So I cover all the different commodities out there. And then I do a end of day report. So after the market closes, we take a look at what's going on inside the sectors inside the S&P 500, the index ETFs, IWM, diamonds, SPYs, and Qs, as well as the indices and just anything that I note to help folks in the overnight session. So an example might be the spot volatility index, which I believe is, I'm not looking at it right now, Basil, but it was trading above a one-day rate of change above plus 10%. And when we get days like that, for those folks that trade the equity futures, it's really a cool tool because we put that together with different bottoming patterns that I teach subscribers, like you teach subscribers, the Chapman wave. And it just provides an edge to allow folks to understand what the markets are doing, where they're headed to, because we identify support and resistance levels. And so that's what I do each day. And then, like yourself, do a show. So I thought that today, maybe just carrying upon the theme of last week, we were talking a little bit about the about the bigger picture out here. And the net capital movement is really, for me, is one of the keys to understanding the future. What I mean by that, it's a matter of being able to try to identify, is money flowing out of Asia into the U.S., out of the third world economies into the U.S., and out of Europe into the U.S., or is it going the other way around? So understanding net capital movement is really key to understanding the future. And during periods of war, or international uncertainty. So we certainly have that going on. Capital typically, or the U.S. dollar, capital flows into the U.S. dollar. And, because we're the reserve currency is one of the reasons out here. Also because the U.S. dollar has never been canceled. That's way different than the euro and other currencies over in Europe.
Thank goodness.
Different than currencies in China. Really any place around the globe. So the U.S. dollar index has never been canceled, and is a reason that capital will flow to that. Now, a lot of people will talk about inflation and all the money that's out there under the assumption that the U.S. dollar is somehow cratered. The U.S. dollar index bottomed in May of 2011. And right now, it's generating a signal, at least in my work, that price might target the 109.58 level. And we're trading around 99.92 right now. So
that would be above the high that was made in 2020 of 102.99 on the index.
Yes, yeah. So I've got an A to B. Yeah, yep. I have an A to B equals CD pattern, price above the top of its daily profile, and certainly the swing point that you're referring to is a level that's got to be taken out. But the notion that somehow the U.S. dollar index is cratering is just a incorrect assumption. And we know that when an instrument. Another thing that I want to share with folks is that when instruments trade above the prior year's high, or then the instrument is termed to be in a bullish mode. And the opposite is true. If you start trading below the prior year's low, instrument is definitely bearish out there. So here's a picture of the U.S. dollar index for a daily time frame, Basil. As long as price remains above 96.94, from a yearly standpoint, the U.S. dollar index will be bullish. Now, as you know, there's currency pairs that make up the U.S. dollar index. 3 of those currency pairs, the euro, the pound, and the yen, make up 83%. The other currencies are the Canadian dollar, the Swiss krona, and the Swedish Swiss franc and the Swedish krona out there. But if we just focus in on these 3 that make up, meaning the euro, the pound, and the U.S. and the Japanese yen out there, what we'll see when we take a look at their monthly charts is that there may be a change in trend unfolding by this coming May, so next month. And the U.S. dollar index generated TD9 count bottom patterns in 2021 for the euro. That's the euro bottoming pattern. Well, where did I? Oh my goodness!
That's the euro dollar currency pair.
Top right there. There we go. So with the upper right hand chart, you'll see bar number 9. It's another pattern that I teach out there. And if you take a look at the pound in the lower left, it was a TD9 count top that identified that top. And we can take a look at the U.S. dollar index on a monthly basis. It was a TD9 count bottom. Now, if we take a look at what's going on right now. Right now, the U.S. dollar index, if you look at the very right hand side, it is in bar number 9. Remember, there was a bottom. A TD9 count can either top or bottom bars 8, 9, or the bar following 9. If we look at the euro, it also is in bar number 9 out here. Looks like it's going to go target the 107 level. And if we take a look at the Great British Pound, it's also in bar number 9, and the Japanese yen is in bar number 9. So this is suggesting to us that we may see a change in trend in these currency pairs. It may be by the end of April. It may be by May using the TD9 system. One of the reasons that I like to track currency pairs, especially the euro, is because of the impact that it has on capital flows into the U.S. stock markets out here. And we've taken a look at this chart in the past out here, and a real key level for the euro is going to be this 105 area. These blue arrows, and I'm just focusing on the euro here, Basil, these blue arrows show the valid monthly TD9s for the euro since 2005. So if you start in the lower left, you'll see a TD9 count bottom. That took price up until it formed a TD9 count top. If we take a look at back here in July of 2015, we see a nice TD9 count bottom. Then we've got the TD9 count top that we took a look at in 2021. And now we've got another pattern, another TD9 count pattern that is forming, as I said, will complete by May. So it's something that we really want to pay attention to. The July 2007 TD9 top, people might have thought I overlooked that, and I didn't overlook that. This is a pattern that actually failed. Now, when I say it failed, when you get a TD9 count, what price will typically do is move down and test this line that I call the oscillator and change line, another tool that I share with people. And if price holds a green oscillator and change line as it did here, that's a very bullish signal. We see that price basically doubled in the euro off of that TD9 count top that had failed in July of 2007. So we want to pay attention to both sides of the trade out there. And if the euro, in this case here, continues to fall, then we should see a strong rally in the S&P 500. And again, that key level that I'm watching here, and this is, we're looking at a line chart, so just closing prices. So on a closing base, if we see a move below 105 inside the euro, what we're likely to see is a huge move up inside of the S&P 500. When I say a strong move, I'm referring to figures like 5022, 5512, or 6001. Those represent horizontal trading ranges. You may remember that takes us back to the days of Bud Rolfs out there.
Correct,
So that's my view. On a shorter term basis, what I'll share with people is that the S&P 500, the cash index, is in bar number 8 today. The ES Mini is only in bar number 7. This is
you mean on the way down?
Yeah, the way down.
Yes.
And this means that we could see a bottom between today and Wednesday for the S&P 500. So, Baz, always great to be with you. You do such a great job, and thanks for taking the time.
Thank you very much, Steve. Love to hear your work, and I love the way that you always dig deeper into everybody's techniques so that it becomes your own. Thank you very much.
You bet. Take care.
Have a wonderful day. Thank you. Folks, we'll be back. Basil Chapman, sitting in for Tom O'Brien. Yes.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien, and this is going to be very interesting because that little rectangle formation that was going on and on and on finally took out the low of the day. Now we're going to see, is there any kind of target? What happens in this rectangle formation is when the price goes just above the high of this horizontal line and then suddenly goes and takes out the left side low, in other words, the base. What happens is very often, because it happens so suddenly after being support, in this case, being support since about 11:30 this morning in the 5-minute E-mini bars. And what we're looking at is a sudden pullback. What happens is a quick revisit. In this case, it's the 44.18. Will it have a quick visit to the 44.24, 44.26 area before maybe pulling back again? That's what happens. The speed with which it goes under means that it forgot to put its suntan lotion or whatever it is, that goes back for whatever it forgot or say goodbye to its friends, and then it comes down. So we're going to be watching this very closely. Now let's go through this. What I had said was, and thank you to Steve for the interview. You know, Steve does terrific work and was fascinating. He also does Chapman wave methodology. He's actually automated it. My finding is that in automation, it's really fabulous, but there are just the subtleties that I like to have in my own Chapman wave notation, which I do by hand. Every one is by hand because of those subtleties that make the difference. And look, here's a peak D, Tractor Supply Company in the den. Here's one for Basil, TSCO, Tractor Supply. We were long, and it rallied, and it got to that D, and then it suddenly had a pullback and said, no, we're out of here. But all of a sudden, over the last 3 days, it's had nice green bars. It's holding pretty well. It's only down 40 cents at 235.98. We got both Deere Tractor Company and Tractor Supply, although Tractor Supply has very little to actually do with tractors. It has to do with the pet food, supplies, clothing, trailers, garden support, propane, tools, mowers, everything else. And it's in leg E in the monthly chart, holding really well. And because I believe this is a brand new leg B in the weekly chart, I think this is in play, and I consider that we might go right back into this on any pullback here that's not too deep, because I think it's acting extremely well. I was just a little worried that maybe supplies are difficult to get for pet food and stuff like that, but so far it's saying, hey, I'm holding really well. So that's, and the other question was, Deere earlier on in my show earlier today in the Tiger Technicians Hour, had a question about Deere. Yeah, this is also holding very well. I didn't like that gap, and I need to have, I'll be talking about in my webinar coming up on Wednesday, 4 o'clock to 5:30 for subscribers. And remember, it's almost like a money back guarantee. Or you can come in, you'll get your money back if after 30 days you're dissatisfied with my newsletter. You'll be able to listen to all of my webinars. Take your time and do whatever it is, and then bail out if you want. I'm hoping you would stay. Most importantly, look at all these patterns. Peak D in D at 437.98 as March was closing. Gaps down. It hasn't filled the gap, but it started today. My rule of thumb is that if gaps, this is a little bit small, but if it's a big gap, if a big gap gets filled on the way up, that's usually a very big positive, because it says whatever was bothering this particular tradable on the way down, that's been resolved, and now it's looking much better. So this is a very special market in the Tiger YouTube. There's a discussion about the DBA, which we've been long since the 13s, way back, and now it's trading at 22.55. Look at these rectangle formations. I want to teach these. These are so fabulous. Look, when it's in this pattern, working its way in a stair-step manner towards the previous high, the rule of thumb is in a shorter time frame, or in the time frame that you're looking at, there should be a move just under, right on, or just above the previous high of the flagpole, in this case 22.64, the peak G that was made on the 3rd of March, as all the other commodities scream to the upside, pulls back to the 2130s, and now it's trading at 22.55. But if you look at the weekly chart, this peak E has the same rectangle, which is almost like a cup formation. So this is really important. So many of these stocks and ETFs have done this in the commodity area. So this is still acting extremely well. But look, if you go to UNG, This UNG is United States Oil Fund. It had a high of 22.10 at a peak G in the Chapman wave on the week of the 6th of October. It slumps down, cuts in half, 11.69 in December of the week of the 27th of 2021. And then it goes peak A, peak B, and it makes a C and pulls back sharply. And remember, when you get a buy signal in the Chapman wave, as long as you don't take out the initial low of your starting point, you keep counting the waves. So look at this, peak C, and then it pulls back, and it walks the 9 periodics, the green 9 EMA. And what does it do? It slices through the 2210 high of October of 2021. Last week it just broke out. Today it's continuing the pattern. And if you look at the weekly chart, United States Natural Gas Fund is in leg C with not the stochastic, which is only at 63%, but the other technicals are extremely good. And if you look at the weekly chart, the stochastic, I'm going to teach about this, 93% is just fabulous. As long as it doesn't immediately go back down under 80%, it means that this is a strong buy signal, even though it's leg D. And that would say that even if you got your pullback from 2308 in the UNG, United States Natural Gas Fund, trading up 99 cents right now, you should see it hold at the previous, and I'm going to be teaching about these cup formations within the rectangle. I call them the gravy cup. This is the lopsided cup formation. Looks like a gravy cup. Peak E, the high of early February, pulls back down at around the 14th. It goes to just under 14, and then what does it do? Peak A, B, C, D pulls back, and a brand new A, B, F/C, an alternate count, and this is an E/, this should be ABC. This is a leg D or an E. So either way, at a doji high, we're really close to, at least on a very short term, we could see a little bit of a pullback. So I just wanted to show you those things, and there's a lot to discuss. And I question, was that a question or a statement? TYCO, I believe you're talking about. TYC, is that correct? CYTO, just got to get the letters right. Yeah, so there's a peak D. Remember we discussed it as we came on air at 3 o'clock, and I said, watch out, that peak D. Well, this is now in a sell signal, almost in a sell mode in the 5-minute chart. It's only a 5-minute chart, but the principle is the same. It doesn't matter what time frame you're doing. All right, let's get out of that. And what I want you to do is this. There is so much to discuss. So let me just run through this. I'm not going to do it as if the demand of what we need to be looking at. I'm going to do it in demands of what I'm talking about, just so that I can show you, give you an indication. Look, when I talk about a peak D, I showed you the Dow on the daily basis made a peak D. Well, you know that the all-time high was what? The fourth highest peak? Peak D at 36,952.65 on the 5th of January. Look at Boeing. Who talks about Boeing these days? It's just peak D was the high back in February in the 220s, plummets down to the 160s, and makes a peak D just under 200 in the day. Look at this down channel. It just refuses to get out of the down channel. Talk about down channel. Look at this down channel in the bonds, the TLT. It broke under it. I'll talk about that. That's very important because we have something to look at. That'll be a breakout.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Hi folks, Basil Chapman for Tom O'Brien, and sitting in my show is at 10 o'clock to 11. It's called the Tigers Technicians Hour. If you want to call, I'd love to hear from you. But in the meantime, you remember I was talking about these narrow channels that just keep going up. I did this the other day on my show. Well, I'm going to bring it back. ABBVs, AbbVie Inc., Abbott Labs, Spin-off Pharma. They do Humana. You say Humana, I say Humana. It's Alaran, Botox. They do a bunch of things that are really important, I guess. Well, we're looking at this price. It just keeps going up and up and up. I call it the worm on a tree branch. It just keeps going up. It just ignores everything and it moves higher. And then suddenly it breaks out of the channel. Well, the rule of thumb that I have, a lot of thumbs, is that if it breaks out of the channel, it needs to establish a new, I talk about rising trend lines. So this is the new trend line right now. You've got a whole bunch of lows that are higher lows. So that's the line in the sand. If at any point, AbbVie trading down 5 at 169 today after making an all-time high, or 175.91, on Friday, if it closes inside this channel under 165, it means that this move is over, and now you're going to get still higher highs, maybe higher highs, but a very choppy. It looks like Bart Simpson's hairdo. Gee, I haven't watched Bart Simpson in years and years, decades. But anyway, that hair gives you the spiky spike and goes lower and higher and lower, and you can see it maybe even go below the pink line. Well, I'm saying that. Why? Because look at this chart. You see this chart here? See that little mini channel right there? Chapman Wave inside track repellent zone. Did I just have a caller? Or do I have a caller? Let me just ask my. Yep. Nope. Well, I'm not sure. In the meantime, so what we're looking at here is if, in fact, this price here of the TBT powers higher, even from here where it's broken the trend line, if it starts to come back at 23.61, and if it starts to trade at any point in the next 3 to 5 sessions, you have to give it a little time because you can see each one of these moves is a number of bars to the upside. So you need speed on the downside. So if in the next 3 to 5 bars, not only does it close below 22.80, but in fact, it starts to break 21.30, finally, you've got this left side, right side price time match. If I can do this in time, let me just get to it right here. Remember, TBT is what? It is actually looks like the 10-year yield. It is the ultra short 20-year T-bond ETF. In other words, it's the reverse of the TLT, which broke its downtrend line, that big channel that was on the way down. And now look at this. This is called the double U formation. I used to have a different denomination for it, but now I just call it the double U. Now, one of the reasons is that within this particular context right here, you see the number of bars, weeks it took on the left side from the cup and handle, you go to the top, but this is not. This is just the U-shaped pattern using the horizontal line. So it goes from the gap down back in February, the week of the 28th of 2020, at about 2164, and it goes straight down, and then it goes sideways, maybe a little bit of a bowl or cup formation, and then it starts to round, and it goes to a second buy mode, going to a peak D at 22.60 on the 16th of week of the 16th of March of 2021. And then what does it do from peak D? Remember, how important are Ds? Ds are really important. It pulls back, and it goes all the way down to 15.53 on the week of the 3rd of December. And then it runs to, what is it in right now? It is in leg D. In leg D at 23 with a high today of 2370. What was my target here? It was the 2260 level from March of 2021, but it was this gap. It was this whole area between 23.09, the low, 23.09 on the week of the 21st of Feb, to the very next week, the 28th, with a low of 1989. What does it do today? It's right there. But the stochastic is at 86% and flat. Very good. What's telling me that there's a chance that we could have a pullback in yields is that the unbalanced volume, the blue line, which I'll be teaching in my webinar on Wednesday night, is that's very overbought. It's the only overbought signal I've got other than the leg D. This is the weekly chart. The monthly chart is broken out in leg C. It should go to a D. This is yields. I mean, if I'm talking about yields, let's go to the TNX.X. There it is, TNX.X. This is an even longer timeout. It's at a high in leg D today in the Chapman wave inside. I'll teach this as well. The inside wedge target resistance line. It went to a peak D and E right there around about March of 2021, pulls back, and now it's just broken out in leg D. It's 2 weeks late in the left side, right side price time match that I was actually looking for. Let me see if I can do this. And look at that. Look at that beautiful, and what happens in these bull formations for anyone who was trading gold with XAU back in 2000 when it was at about 44, this is the gold mine and silver ETF, that created in gold the most long base of a bull formation before breaking out. I like to say sometimes you can go in distance from the horizontal to the vertical. I'm not going to say that in this case. I do not want to see yields back at the 16, 17, 18% level from the 1980s. But look at this. MACD is good. Stochastic's flat at 94%. So yields are going higher, but on a very short-term basis. We're going to be watching this very closely. I think that the Fed is going to get a little nervous if the market starts to deteriorate, because they're going to say, oh, we have to do what we have to do, but I don't want to be responsible for that. So we're going to be watching that very closely. So there are a couple of things I want to look at. We were looking at peak Ds. Look at DD, which is the DuPont. In the DuPont chemicals, it makes, in the daily chart, it makes a peak D right here, I believe. It was an E at 85.16. Then it makes a D in April. No, must be February. February plummets down and makes another D in March, plummets down, and is testing the lows. And now it's in the rectangle formation, and this is in the chemical area. The chemical area, up until about a couple of weeks ago, was doing very nicely. So these rectangle formations are formidable if you break under it. If DuPont goes to 64 on a closing basis on the weekly chart, that's not going to be good. Look at NVIDIA. NVIDIA, I heard Dave White. I didn't get a chance to actually listen. I saw him pick up NVIDIA. peak D right there, about the 28th or so of March, and it's gone from 290 to 219 in just 2-3 weeks. A peak E in the weekly and an F in the monthly. So these semiconductors, I don't know, they're not, this is not a good scene. Look at Square, peak D at 289 in the same thing, the rectangle top, double top of 283.19 in March, pulls back sharply to 192. And then what does it do? It double tops at peak D at 289 the week of the 6th of August in the cup formation, double cup formation, and then it pulls back and drops really sharply to 82. So what we're looking at, and the reason why I've been raising cash in the air for subscribers to my opening call, is that I think there are going to be some fantastic buys coming up in the next month or two. So I'm not, I think we've got to look at this as opportunity, but we've got to be very judicious. So our long positions, for instance, we're still long the dollar. The dollar just made a new recovery high just 2 days ago at 100.19.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Basil Chapman sitting in for Tom O'Brien and in the Tiger YouTube. Folks, go to the Den. For $1 a day, you can, for $1, not a day, for $1 a year, that's like 0.03 or something a day, you can, all this fantastic information, all these different trades that we see people doing, is just really fabulous. So the question in the Tiger YouTube is, Basil answered this, what close will be a bad one for the non-market? if you can address that. Now, I'm not sure if he means bond market or the general market. So I've actually done all the parameters. I don't have it right in front of me because I just got that question. I do have it in my show, The Target Technicians Hour. Tomorrow I'll start talking about that. And then a question Eddie wanted about, is this a new leg A in Apple? Yes, it's a spectacular A, but so far it's a single leg A up. You remember, I like to talk about these single leg A. Does it turn into an Eiffel Tower where it comes straight down again, like an uppercase A, straight up and straight down? We're going to be watching that. But all I can say is that Apple, on a monthly basis, is still acting well. On a weekly basis, just starting to show a little tiredness. 160 is going to be absolutely 160 to 150 is going to be the key support for Apple over the next week. And the market is really acting very weak. The reason why for subscribers to Opening Call, we've built up a really nice cash position where we still have areas that we are long, that we are considering areas under the radar at this particular moment. In fact, we had one that we just missed adding to today by 1 penny, and it's doing very nicely. So let me just do this and say thank you, Tom, very much for allowing me to guest host. I'm doing my webinar. This is for subscribers to my Opening Call. The big question is, can there be new all-time highs in the Dow and the S&P in 2022? And I'll be discussing that and what I'm looking at. Oh, let me just show you this right now. Oh, can I get it in time? Yes, I can get it in time. There it is. So this is the particular chart that we're talking about. I use one particular moving average, and if it's green, it's positive. This is a monthly chart of the S&P. And look, since 2010, in February, it went at 1100. It went positive after the 696 low. And remember, we got the long of the Dow, the diamonds on the day, March 6th. Now, what we're looking at is it's being green, and it's still green. This is a monthly chart. It's just one indicator I'm going to teach you. One indicator says the S&P is still bullish on this